Hello and welcome to this video. I'm Randy Chalmers with Louisiana Housing Authority, and today we can discuss what is a loan modification. But before we do so, make sure you click the subscribe button, hit that notification bell, because I post real estate information like this all the time and you don't want to miss it. So what is a loan modification? Well, loan modification is an option to help you to be able to prevent, avoid, and even stop a foreclosure, right? Within loss mitigation, that is a term that mortgage servicers use to mitigate their losses, because foreclosure is very, very time consuming and expensive, right? So within the loss mitigation, there's different options such as a deed in lieu, a short sale, repayment program, a forbearance, and of course a loan modification. So today we're going to discuss what is a loan modification, but other videos I've done on those particular topics like foreclosure, short sale, repayment plan, deed in lieu, etc. So I encourage you to watch those videos to arm yourself with enough education so you can make sure you're making a right financial decision for your family. So a loan modification is very simple. What it simply is that you're going to be modifying your loan if you are approved by your mortgage servicer. So you may be behind 3 months, 4 months, 6 months, etc. And what the loan modification is going to do, could possibly do, is put those payments on the back of the mortgage. So you may have a 30-year fixed mortgage, you've been paying on it for the last 4 years. Now they're going to extend your mortgage loan term another 4 years to make up those back payments, right? That's a possible loan modification. A loan modification also could lower your interest rate. You may have purchased a house with a high interest rate, but now they're going to drop your interest rate significantly to be able to move forward. For example, I've seen borrowers went from a 4.8% from a 6.2% interest rate all the way down to a 2% interest rate, right? Also, the principal payments could drop. The principal and interest could drop for a certain time period for the first 6 months, and on the back end there'll be some makeup payment as well. So that's what a loan modification is if it's approved. Now the steps are pretty much like filing, pretty much like doing a loan application for the first time. So if you recall, when you were sitting down with your mortgage lender or your banker, and you had to fill out a complete application, you had to send over paycheck stubs, bank statements, tax returns, etc. All those documents, if you recall, that you had to do, and you had to keep resending those documents, seemed like, right? That's the same thing that's going to happen with loan modification. You have to do a full application, and they want to know what is your hardship, right? You have to articulate to them what your hardship is, and then now you got to send all those financial documents over to them so they can have a complete file so they can make a decision to see, do you qualify for the loan modification. Now, what's good about CFPB, which is the Consumer Financial Protection Bureau, that act came into place after the crash of 2008, 2009, and that what that does, that allowed individual borrowers to have 120 days after their first delinquency to be able to get approved for some type of loss mitigation option, right? So the lender typically does not start the foreclosure process till after the 120 days. But within the 120 days, that borrower exploring it, loss mitigation options, and loan modification may be one of them, right? Now, I do want to warn you, right? I want you to be set up with the proper mindset. The banks, the lender, your service provider is not your friend, right? I want to be very clear, right? You will hear things from them like, hey, yes, we are working on it. We want to help you to save your house. We're doing the best we can. But at the same time, it seems like you might send them over your bank statement and then you didn't hear anything from them. So you call them a week later to verify that they received the bank statement, and they tell you no, they haven't received it. And you're like, well, I sent that to you twice, right? Oh, can you send it again? So now you have to resend those bank statements over. Then they're asking for a document, maybe a paycheck stub. So you send over a paycheck stub. 3-4 days pass by, you give them a call to confirm they received it. They say no, right? So you have to resend it again. So these are the type of frustration things that borrowers go through throughout the loan mitigation process. And I'm going to be frank with you. It's almost seeming like the mortgage servicer want you to give up. Like they want you to quit and be frustrated and just get in a depression mode and just throw in a towel. But I want to encourage you up front to have the proper mindset, knowing that it will be a battle, right? You know, you're already going through tough times. For whatever reason, you missed a couple of mortgage payments, you might be still in a position you're not able to make up the payments. But at the same time, if your goal is to save your house and avoid to be able to salvage your credit at least, then you have to go through this process and be perpetual, be consistent, right? Be persistent, right? Constantly go through it. But just know up front that this may be happening to you, or it may be happening to you already, right? So having said that, that is the loan modification. If you are looking for more information, then I encourage you to visit us online, give my team a call. We can schedule a free foreclosure prevention consultation to answer any other question you may have and even concerns. And for the next video, we'll see you guys then. And I hope you're having a great day on purpose. Take care.